Okay, we're good to go. Welcome, everybody. Welcome to our guest today. Thank you so much for joining us on this topic. I was just talking to our panel before we got started, and I said that I think the three hot topics right now are: when do I get my vaccine? How many case counts do we have so that we can reopen again? And real estate. And one of the comments came back not necessarily in that order, and that certainly is the case depending on what your status is today. So thank you for joining. My name is Richard Cunningham, and for those of you I have not had the pleasure of meeting, I'm the president of the Markham Board of Trade. We run these events from time to time on topics that we think are important to you and that we can provide the best information on. I'd like to start by welcoming our mayor, who has been doing a fantastic job along with the council in steering us through this very unusual and difficult time. So please give a warm welcome virtually to His Worship, Mayor Scarpitti.
Well, thank you very much, Richard, and good afternoon to everyone. I'm gonna just touch on a few points because I know everyone's here to hear the panelists, and unfortunately, because of other meetings, I can't hear everything they're going to say, but I'll stay as long as I can. And I think you're in for a real treat over the next hour to hear the different perspectives, certainly the challenges, and hopefully some of the solutions of some of those challenges that the real estate market is currently facing. I want to thank you, Richard, and the team at the Markham Board of Trade. I think as a community, we have responded as well as anyone could expect with the pandemic, and that's everything from certainly supporting our healthcare workers and long-term care facilities, with businesses and individuals coming forward throughout the pandemic with the donation of PPE and food and helping those most impacted, to, of course, supporting small businesses. And I won't go through everything we've done, but certainly the last thing we did was to pass another 0% tax increase for property taxpayers in the city of Markham. Particularly, we felt that was important during these challenging times. I think your session this afternoon is really timely on so many different levels. It's not just about the market today, or certainly over the past few weeks. During my inaugural address at the beginning of this term, I highlighted the fact that affordable housing, and that I was going to host an affordable housing summit in this term of council to address the need in our community. And I know different terms get bandied around, but really, over the last couple of years, the situation has really gotten worse, particularly for young people who are professionals. They have good paying jobs, but almost with each passing day, and right now, it seems like almost with each passing hour, the opportunity to buy your first home for them is getting out of reach. And so just to quickly touch on a couple things, 1 in 3 households in Markham currently do face housing affordability challenges, and that's a concern. Just think about this, and we talk about inflation, we talk about so many factors that impact the economy. The fact is that the resale home value in Markham has more than doubled in the last 10 years. So clearly, people's incomes have not kept up with the pace of the value of real estate. And right now in Markham, prices are approximately 8 times the average income. And that's in this community. Dare to say in other communities, that figure would be higher than 8 times. So certainly home ownership has become more difficult. We're doing what we can to expand the supply of rental units and rental housing. I invite you to go to Your Voice Markham and find out about some of the initiatives that we have going. But we're looking at some tools to begin to address the problem. It's not going to solve it completely, but have inclusionary zoning so that developers will have to include a certain percentage of units that they produce that fall within the affordable housing category, either rental or ownership. Certainly increasing the supply and trying to provide some kind of incentives. all that being said, that's sort of the major challenge I would say for us is for young professionals to be able to live in our community. And I know that that's a concern for employers, because employers want to make sure they have their talent close by and that they can be part of the community and not have to go elsewhere. And while the pandemic has changed the way we do business, I think it's still too early to really say in the longer term how much of that is going to last. I think we'll probably end up with a hybrid, and there's probably difference of opinions, and maybe we'll hear some of those this afternoon about where we'll end up in the spectrum. But in terms of investment, in terms of community building, you probably won't be surprised to hear me say that the city of Markham is one of the best places for real estate investment. We have two very exciting urban growth centers compared to other jurisdictions. One at Yonge and Highway 7, the Langstaff community, which will get underway with its first project, and maybe Lindsay will touch on some of the aspects of that community later on. As you know, with each passing day, and hopefully by some point in this term, we're actually going to see shovels in the ground for the Yonge subway extension all the way up to Highway 7. It's a critical piece, and we keep pushing for it. And it's with confidence that I think we're going to be there, and that we're going to get that project approved, which will unleash literally billions of dollars worth of economic prosperity, not just on the Markham side, but in that whole corner. The other exciting one is Markham Center, which is just outside our civic center. Again, live, work, and play. I know that gets used a lot, but truly a place where people can live, people can work, people will be able to enjoy the beautiful natural feature of the Rouge Valley. And now we have almost a spanking new university that's going to open up in 2 years, which again creates tremendous capacity and community building. And into the future, I will just say this, a part of the challenge, and I do speak to the Premier about this when he isn't busy with other things these days, we have a problem in the province of Ontario. The planning process is broken. It takes over 10 years from when we identify where new communities should be built to when a family can actually move in to a new home. I know you're going to hear about some of these challenges, and as I said, hopefully some of the solutions. And I congratulate you, Richard, for putting this together, because it helps us understand the needs of employers, the needs of young people in our community, and our capacity to grow the economy here locally in the city of Markham. And thanks for the opportunity just to pop in and to say hello.
Thanks very much, Mayor, and thanks for taking the time to join us today. I'm going to introduce our three panelists, and then each of them will be talking about their respective areas as it relates to real estate. We also have some questions that were sent in to us prior to the event, which we'll try and get to as many of those as we can. So we'll start with Jason Mercer, who is the Chief Market Analyst and Director, Service Channel at the Toronto Regional Real Estate Board. Jason is the TREB Chief Market Analyst and Director of the Service Channels. He's the market program that provides products and services that help realtors and their clients fully understand trends in the GTA housing market and the underlying economic drivers. Jason also oversees TREB's MLS Services Department and the delivery of information and data products to the TREB membership. He brings a wealth of information to the table. I know he does a lot of these presentations, and I've heard him before. He does a fantastic job of kind of steering us through all of the numbers and all of the activity that's going on in the real estate world. So let's hear from Jason. Thank you.
Thanks very much, Richard. And I'll share my screen here. And I just got a few slides that I'll take everyone through quickly, just to kind of set the stage. I know the real power of these events is to have a Q&A and the more ad hoc discussion that comes out of it. But I figured I'd just provide a little bit of background and some stats in terms of what we've seen over the last few months and how that relates to some of the consumer polling that we've undertaken. So really appreciate being here today. And I just wanted to start off, and I think this dovetails nicely with what Mayor Scarpitti was talking about in his opening remarks, is that, you know, when you think about the real estate industry, whether you're talking about the resale market, which by and large I speak to, but also commercial real estate, new home construction as well, you're talking about, you know, huge economic impacts to the overall economy in the province of Ontario, and drilling down to the individual GTA municipalities. And that's because, you know, a lot of the, you know, inputs to this industry and a lot of the spin-offs are very local. And so, you know, the combined real estate sectors, if you will play an important role as we continue to recover from the impacts of COVID-19. And so, for example, I mean, Altus Group did some analysis for us recently, you know, looking at, well, what's the overall impact of each home sale on average that gets reported through TREB's MLS system. And it's, you know, approaching $70,000. So if you're thinking about, you know, somewhere in the neighborhood of between, say, 90 and 120,000 deals we've seen on average over the last decade, you're talking about billions of dollars of additional spin-off expenditures that accrue to the economy. And so when we're thinking about the housing market in general, when we're thinking about potential policy changes that could affect the real estate market, it's important to bear those numbers in mind, both from a, you know, an overall impact on the economy, but also how those spin-offs also impact jobs, hundreds of thousands of jobs, and how they also impact government revenues. So revenues accruing to all levels of government and the ability to provide services to constituents. So thinking about the pandemic in particular and how it impacted the housing market, I mean, if we think back a year ago, literally to the day, you know, we'd seen a real pullback in the demand for residential housing. But, you know, as we moved through 2020, we actually saw the market pick up and rebound very, very quickly. And when we did consumer polling at the end of the year, in conjunction with our market year review and outlook report, we found that actually as we moved through COVID-19, how things unfolded, both in terms of the economic recovery in some sectors as well as low borrowing costs, meant that, you know, going on 2/3 of people who purchased a home in 2020 had actually sped up their purchase. So, you know, very interesting. A lot of that had to do with the fact that we were able to move very quickly from, you know, the bricks and mortar office to the home office, and at the same time, people were obviously able to take advantage of the low borrowing costs and how that impacted their ability to afford one home type versus another. So thinking forward, then, as we move through 2021. We also looked at buying intentions. And so we did this survey basically the last half of November and beginning part of December, and asking, you know, what are your buying intentions for the next year? 30% of people said, you know, we're very likely or at least somewhat likely to purchase a home. And that was actually the highest result that we've seen since we've been doing the survey and asking the exact same question since 2015. And 12% said they're very likely to purchase a home. And again, a number that, you know, we hadn't seen since the fall of 2015. And so, you know, despite, you know, the impacts of COVID-19, both in terms of the economy and in terms of public health, there was real strength in terms of the number of people that were considering purchasing a home. But Mayor Scarpitti also mentioned the fact that you know, it has become more of a challenge for first-time buyers to enter the marketplace, and I couldn't agree more. If you think back to 2015, 2016, we were seeing, you know, half to even more than half of intending home buyers were first-time buyers, and while that share still remains strong, came in at 41% last year, it certainly, you know, dipped quite a bit from what we saw, say, 5 years ago. And so, you know, there is affordability there is an affordability issue for first-time buyers, both in the GTA, and I would argue even other surrounding municipalities in the Greater Golden Horseshoe. There still is a lot of interest from that cohort of buyers as well. And so, why are we seeing continue to see this interest in the housing market? Well, number one, we saw a very steep drop off, obviously, this time last year in terms of economic growth. But then we saw, an equally steep rebound in a lot of sectors of the economy as well. And we could see that with the red and green bars on this chart. But looking forward, I mean, we're still seeing 10% annualized growth in the fourth quarter of 2020, and the consensus outlook now is for getting on 5% annualized growth in each of the quarters of 2021. And so, while not the same kind of volatility that we saw this time last year, but at the same time, from an historic perspective, that 5% number is above what we had seen for most quarters over the last decade. So again, there's a confidence there for a lot of households, particularly those households that are working in sectors associated with average to above average earnings. There's this confidence that they're going to be able to gain and or retain their employment over the long term, and that's obviously important when you're thinking about purchasing a home and making payments over a number of decades. And obviously, helping out with that is the fact that, borrowing costs are expected to remain low. We saw the Bank of Canada act very, very quickly this time last year, and we saw their target for the overnight lending rate drop almost literally overnight back to levels that we hadn't seen since the 2009 recession. And obviously, the driver of sort of mid to longer term rates, longer term bond yields also followed suit. So for example, on this chart in gray, I'm showing the 5-year Government of Canada bond. And that gives us a sense of what it costs lenders to raise money to then turn around and lend out to home buyers in the form of a mortgage. And while we have seen bond yields creep upwards, and we have started to see contract mortgage rates creep upwards as well, still expected to remain very low from an historic perspective. And obviously that will continue to be a positive for affordability. But I think, what we've seen in this housing market cycle that's a little bit different than, others over the past decade is the geography of home sales, or where the growth has really been centered. And so if you're thinking about those regions, including York Region and the municipality of Markham, you've seen a lot more demand in those areas versus the city of Toronto. And again, this is from our polling at the end of last year, but it's also borne out in our statistics that there's a lot more interest in these suburban regions. Some of that obviously has to do with COVID and the type of home that people are looking for. And that's what this chart kind of outlines, is that, for the first time since we started doing this consumer polling back in 2015, we've actually seen an uptick in intentions to purchase a detached home. And by the same token, if you look at the dark green line, we actually saw intentions to purchase a condominium apartment move in the other direction. And then that certainly was borne out in the actual transaction statistics that we saw for 2020. If you look at the left-hand side of the chart, we saw very strong growth in single detached sales, while new listings are actually down over the same period. And so what that means is much tighter market conditions in that segment. And it was a similar story for semis and towns as well, where annualized sales growth was outstripping growth in listings. So what that represents is more competition between buyers. So you had all these households that were looking to purchase a home, and as we saw, it actually sped up their purchase of a home, moving into the marketplace, taking advantage of low borrowing costs. And so more competition between buyers, and obviously that had the impact of accelerating home price growth. On the other end of the spectrum, in terms of the condominium apartment market, we actually saw a decline in sales, while listings actually spiked as a result of some investor selling because of a soft rental market, as well as tourism drying up, which obviously impacted the short-term rental space as well. And obviously, when we're thinking about the type of home, there's obviously a geographic factor in there as well. So whereas the city of Toronto, you're talking about 50% of transactions in the city of Toronto are represented by the condominium apartment market, thinking about the other GTA regions, there's much more of a concentration of low-rise home types. And so in York region, for example, we saw close to 17% year-over-year growth in home sales in 2020 versus 2019. And so thinking about where we're heading as we move through this year, we're certainly expecting well in excess of 100,000 home sales reported through TREB's MLS system this year. And if you think about what we saw GTA wide in the first quarter of 2021, by far a new record in terms of overall transactions. Not surprisingly, Markham, as an inner suburb in the Greater Toronto area, mirrored the overall GTA stats quite closely, with a new record in home sales reported for Markham. And at the same time, as I mentioned, very tight market conditions. So we continue to see through the first quarter of this year sales growth well outstripping growth in new listings. And that's not to say that new listings aren't up on a year-over-year basis through the first 3 months of 2021, but they're just not up nearly as much as what we saw in terms of sales growth. So again, growing competition between buyers, and we're not keeping up with that in terms of the supply of listings. And that gets back to another theme that Mayor Scarpitti mentioned, and that's the ability to bring on more supply. And that'll become even more acute, that issue, as we move into 2022 with sort of global vaccine take-up. We're going to see a resumption in immigration, and we're going to see immigration potentially move to record levels, because that's one of the tenets underlying the overall federal recovery plan, is that we're going to see an uptick in population growth, which obviously drives economic growth broadly. But all these people are going to require a place to live. And the GTA is the single greatest beneficiary of immigration into Canada. Those people are going to be looking to buy a home, or they're going to be looking to rent a home. And in both cases, we have a real constrained supply. So I'll leave it at that. I'll stop sharing my screen, and I'll send it back to Richard, but certainly happy to expand upon these issues more so as we take Q&A. Thank you very much.
Thank you, Jason. I'm actually have been looking for a house myself in the Toronto area. So I wish a few more of those people who are looking would look in York region or somewhere out of that area, so the bidding wars would be a little bit lighter. But next to speak about the residential condo markets is Lindsay Stollery Jephcott, who is the Chief Investment Officer, Angus, Glen, and Kylemore Group of Companies. Lindsay chairs the board of Clearview Resources and is a board member of several golf and real estate companies, including Angus, Glen Golf Club, and Kylemore. Lindsay's going to talk to us about the whole background of what's going on. And as the mayor mentioned, the problem, of course, that developers face is this very long runway between let's put a property up and getting it approved and actually having the people moved in. And that's a huge challenge when we've just seen a demographic change of people moving out of the downtown area in virtually 10 months and a whole change in how people are working. So I'll leave that with you, Lindsay.
Sure. So I can talk specifically a little bit about the COVID impact and what we've seen in the residential housing market. Now, condo specific, we don't actually have very much product on the market right now, although we do have a lot in the future coming on. So I can't speak to the condo market, but from a new home perspective, what we've seen in COVID is that sales have been strong and demand has been really strong. As to be expected, people are looking for more green space, more access to bigger lots, and working from home being a huge trend that we're trying to adapt to. So what we had actually, interestingly, when COVID hit last March, we were in the process of designing our new community where the York Downs golf course is. And we were able to adapt those home plans to take into consideration the work from home trend. So we were able to add some flexible spaces for yoga, meditation, fitness, as well as designing office spaces for within those homes. So hopefully that that will work out well. And, you know, obviously we can continue to pivot as we need to with those homes as they get closer to development. We also have been, within our corporation, we've been able to pivot technology-wise and have used a lot of video conferencing to meet the potential purchasers, which is interesting because never in the past have we done that, but we've had some sales, a lot of sales, be completely virtual from start to finish. DocuSign for the agreements and video conferencing for meeting the people. So, you know, while these things were already in play, the pandemic has certainly accelerated those trends. So what else can I talk about? So trend-wise, the condos I kind of touched on, we don't have a ton of new product, but the new homes extremely strong. And what we're tending to do is for the new projects, we're definitely doing more mixed use, so less single-family homes, more townhouses and apartments. But overall, the trend is that we just can't simply bring enough homes to the market quickly enough. So again, the supply is challenged, and Frank touched on the fact, Mayor Scarpity touched on the fact that the time from purchase to get the people into the homes is a long time. So, and then the other thing I want to talk about is just the shortages in lumber and brick and other supplies. So to actually get the homes built is one thing, but sometimes we get stuck with lumber or stuck with brick, and we can't get either labor, or we can't get the product up to Canada, or there's just a shortage. And so what we've had to do is wait, and basically, you know, you either buy it all at once or you have to kind of be adaptive to it. And then also in terms of COVID, what we found is trades will often only work one at a time. So that can be restrictive in the time delay, because you'd have to, you'll have the drywall person in, but usually you'd have 10 other trades in at the same time. So right now we're just managing through that and trying to factor in COVID and being safe.
York is going to be a large development, I understand. How many homes are planned for that development project?
So for York Downs?
Yes.
York Downs, I think there's the whole block is, I think, 2,000. Yeah, but it's not all homes. It's a mixed use block.
Okay.
Yeah.
All right. Thank you, Lindsay. Our last panelist is Matt Gunning, who's the principal and managing director of Avison Young. Matt began his real estate career in 2003 and specializes in leasing and corporate advisory in the North and East GTA markets. He's a sought-after professional, has ongoing relationships with some of Canada's largest corporations and most dynamic entrepreneurs and business leaders. And he does have extensive market knowledge, start to finish, about the accountability and identifying how to mitigate solutions and risk and increase flexibility. So Matt, the commercial market is kind of pivotal to all of this. And there's been lots of stories, and stories have been changing about how commercial real estate will look from when this all started to today. Tell us your perspective on this topic.
Yeah, thanks, Richard. Appreciate the opportunity to be here with you today. We've certainly seen, a wild, change in the direction of all the different sectors of the commercial market over the past year. We started 2020 with really the strongest statistical environment we could have imagined at that point for both office leasing and industrial. And at that point, we felt like values were feeling very, bubbly in terms of, asset sales. We had seen huge run-ups in land prices. And, what we've seen since the start of the pandemic has certainly been, screeching of the brakes on the office leasing market. Basically any tenant that had the opportunity to reconsider their office leasing decisions or delay having to make a commitment has done that. And so that has really put, it's put some pressure for sure on the office leasing market. And we're still feeling that. Whereas the industrial market has just soared to higher levels, huge run-ups in lease rates. And I'm sure there's tenants listening in today that are seeing that and are feeling that from their landlords and from the brokers that they're speaking to. We've seen rental rates almost double on the industrial product over the last 3 to 5 years. Rental rates for 15 years, most of my career felt like, industrial rental rates were between like $5 and $7. and now everything is approaching, $9.50 to $12, and that's really happened in the matter of 2 or 3 years. And the pandemic has just kind of pushed the acceleration of those rental rate increases. There's been disruptions to the international and global supply chains that have put pressure on rental rates, as well as just an increasing local demand for space has created a ton of pressure. There's competition for every single space that comes to the market. A quick story about the Markham, industrial market specifically. A couple of the brokers in my office over the past couple of weeks brought a 20,000 foot industrial unit to the market down at Warden and Steeles. And in the span of 3 days, they had 35 tenants walk through the space. This is unheard of level of demand from the local community for growth. And that's food users, it's the construction industry, it's all kinds of various elements that are being disrupted by global supply chains. So there's more demand for local suppliers to be producing goods and services here locally. And all of that's having a huge effect on industrial. And then we're also continuing to have, enormous pressure from e-commerce. Every time a large format industrial building gets announced or a project gets, shovel ready, there are tenants, looking at those sites, which, that was not the case 3 to 5 years ago. There was not that level of demand for, large format industrial buildings on that level the way there is today. It's putting pressure out into the Durham region. It's pushing pressure, all over Milton, Brampton, and certainly, what's left in terms of developable land in Markham is, just under huge pricing increasing and pressures. So we're seeing a lot of fallout from COVID. Some of it, I would say, is kind of an acceleration of trends we were already experiencing. There was tons of talk among corporate tenants about more flexible work environments, what we would call hoteling, which means, you don't have a picture of your family on your desk. You just show up in the morning and you're told where you're going to sit that day. There might be 200 seats and they might have 250 employees. And, with people being on vacation or out of the office for any particular day, it works, that people can have that kind of flexibility around their workplace. And now I think there's going to be a lot of pressure from employees to want to get to continue to work from home more often, avoid some of the traffic commute, spend more time working from home where they're able. We are seeing a lot of challenges and discussions with corporations around how to maintain culture, how to have mentorship opportunities, how to continue to train your employees, and how to make sure that there's a lot of connectivity tissue being built within an organization. When everybody is working from their own home, it's hard to maintain those kind of connections. So we don't expect this to be some kind of complete 180. There will continue to be demand for office space, no question. We believe that there will be trimming around the edges in terms of organizations. Different departments within a company can have more flexibility than other departments, whether it's an accounting function or some of your salespeople, we're expecting to see more flexibility within those groups. And there may be some changes over the next 3 to 5 years in terms of the overall office demand. But we're not in for some kind of wholesale restructuring of the economy around how people are using their real estate, I don't think. And then lastly, I'll touch on, I mentioned land prices, which are just wild. I mean, I'm sure Lindsay's feeling it on the residential side, like land prices are just going up and up and up with the value of the residential real estate, so goes the land value. And then, but within an industrial has more than doubled. The retail side is still, an interesting piece to watch. COVID, again, it's an accelerating factor on what we were seeing with the retail world. People continue to like to shop and want to shop to some extent, but I know my family's transitioned to grocery shopping online, and I'm not in a hurry to go stand in a grocery store for another 2 hours just because I could coming out of COVID. So there will be permanent changes and shifts, I think, in consumer behavior that will affect the retail future, but those were really already underway. E-commerce has been having a dramatic effect on different parts of the retail sector for 5 or 7 years. This has definitely, poured gas on that fire, and it will change that landscape. But retail, of all the sectors, retailers are incredibly nimble and adept at adjusting. They were already trending towards creating experiences more than trying to compete on price. Where they can be more of a niche provider of providing a better service and a better experience for their customer. I still think there's a big place for that coming out of this. There's certainly going to be, a huge rush, I think, of people wanting to get out and shop again and feel like they're back to normal at some point. So there's good days ahead for retailers when we can get out of this. But there's definitely going to be permanent shifts coming to the world of retail. But in a place like Markham, where so much of the retail is very centrally located, the land that retail is sitting on is incredibly valuable. The future of mixed-use development and intensification around transit hubs, that pressure is building. That was happening before COVID, and that's putting pressure on the retail world because, if your rental rates aren't keeping up with your land values, the redevelopment pressure to turn what is currently maybe a retail plaza into a new condo mixed-use site, those pressures will continue to grow. Many of the largest landlords in the country are becoming, condo developers as much as they are landlords these days, because that is, a huge underlying value of their future is the land that all this retail real estate sits on. So, those are kind of the high-level pieces coming out of COVID. We're certainly, adjusting day to day to the market conditions, and with every news cycle of good and bad, it feels like the real estate market kind of is trying to keep up and adjust with it.
Thank you. Actually, I want to talk on that one subject because it comes up frequently. I've heard it from various members of ours. The discussion back when COVID first happened a year ago, there was a pretty quick and massive change where people at that time, if you asked them about were they going back to work, would they be working from home, the discussion, of course, was very much around things will never be the way they used to be. We'll be working from home or virtually for some period of time, maybe for a very long time. And there was also the discussion that the towers in downtown Toronto would be sitting there in vacant or certainly not getting the use that they used to get. But as time's gone on in the last few months, especially, I've heard a change in that. I don't know if it's a psychological effect making that change where people are saying, you know what, I want to get back to work. And I hope the boss is going to say back to the towers or back to the office because I miss seeing my friends and family. Tying that to real estate, and I'd like to hear your opinions on this, when many people, 50,000 or more, left the downtown core and went to surrounding areas for the reasons we talked about, more property, being able to have a pool, working from home, having more space and all those sorts of things. What happens when the boss now says, okay, back to the office, kids? How is that going to affect this?
For sure. We talk a lot about this issue all the time. There's different factors. I mean, some of it, demographics is destiny is part of it. And, we've been through this millennial, boom condo cycle in the downtown. That wasn't going to last forever. But I don't know what the next 10 years of the demographic story there looks like without COVID. But certainly it's put a lot of pressure on the downtown employers to, I think, come up with a more flexible work environment for their staff. What has been driving the downtown office leasing cycle, which has been, reaching unbelievable new heights for probably 7 years now consistently. They've developed and built something close to 10 million square feet of office space. It's housing, tens of thousands of these new, condo dwellers, that, to go with all that residential construction cycle. Tech and innovation types of industries that have been growing in the city, they will have to adapt to a new world. Their employees will want to have some more flexibility. The idea that, and maybe we're all going to look back and think it's silly that some company put a slide and and a soda bar in their office space in downtown Toronto, and they did that because they wanted to attract a certain demographic of employee. Or maybe we're going to go back to that. I don't think we know the answer to that yet. But we believe, I would say largely, and what we're seeing is, there is a desire to get back to the office, both from the bosses as well as the employees. There is a lifestyle that lives and breathes in our office environments, whether that's downtown Toronto or even in large parts of Markham, where you're right, you go to work, you see your friends, you interact, you have, you have bonds with these people, you want to see them face to face. Certainly in downtown, where there is, a whole social environment that goes on outside the office environment, right downstairs at your feet of the office towers, people want to get back to that. And, we do expect there will be increased levels of flexibility, because this has been a bit of an experiment that has proven that people can be productive, they can adapt, they can work from home and get the job done. But that's not necessarily something that anybody wants to do 5 days a week anymore. You know, it still feels a little bit like a prison sentence more than an opportunity for a lot of employees, I think. The idea that they get to sit at their kitchen table in their pajamas for 50 hours a week is not really the gift at this point, 14 months into this, that it was at the start. So, you know, our expectation is, you know, whether it's a year or 2 years from now, the office leasing world and the employee-employer relationship will look a lot like it did in 2019 versus some kind of completely different, you know, shift of priorities and workplace experience.
Jason, have you heard anything different to add to that?
You know, I certainly agree with the notion that you know, there'll remain an interest in you know, working downtown if you're doing that before and taking advantage of all the amenities and that exist. And you know, if you think about the condo market and how it's performed over the last, you know, say 5 months, I think that's evidence of that fact, in the sense that, you know, after a pretty steep drop off, and a lot of that had to do with, you know, investors, you know, heading to the exit doors, you know, as we moved through the spring and summer of last year. You know, we've seen things really tighten up. And first in the suburban areas and in some of those condo nodes, whether you're talking about places like Markham or to the west in Mississauga, but even in downtown, you know, conditions are tightening up, where we've basically clawed back sort of the price declines that we saw through the spring and summer and early fall of last year, and so almost back to even. And so, you know, I think that that's indicative of you know, some renewed interest. And I think, you know, once we start to see immigration pick up again, there's going to be demand not only for ownership condos, but also, you know, the investor held condos that exist for rental supply, because we haven't built any meaningful purpose built, you know, rental properties over the last decade, at least, you know, relative to the number of investor held units that have come online on net. I mean, if you look at the CMHC rental market report each year and sort of look at, you know, the growth in investor held condo units and growth in purpose built, you know, on net, all the growth in rental units has come from, you know, that secondary market investor held units. But, you know, the other point I want to make is just sort of thinking about, you know, I also agree with the notion that you are going to see more flexibility. And you are going to see people who maybe were living in the downtown core and now are living in Markham, for example, in a larger home with a yard and everything else, not want to give that up because they like that. But they're also going to want to be looking for ways to easily get downtown. So Mayor Scarpitti mentioned, you know, public transit and the subway expansion, you know, into York Region. There's obviously other infrastructure projects going on around the GTA now as well, and I think that'll be really important. And you know, TRED's commissioned a lot of research and has made, you know, pretty forceful statements on the importance of continuing to improve both public transit and the ability to get around by car and the ability to move goods around our region more efficiently as well. And I think now, as you see this flexibility and people, you know, looking further afield in terms of their housing choices, that need for quality transit or quality transit options is going to be, you know, even more important.
Well, that's true. And all of these things tie together, because actually we run a smart commute program and have worked with large employers for many years to help them move away from single occupancy vehicles. So now that we have people who moved out of the core and may be coming to work at different times, there may be actually more people on the road than we expected, especially if you add into that, for the foreseeable future, those who are not very comfortable about getting on transit with other people. So it's a complex issue, and one that may be actually for the short term worse than it was before we entered into this. Here's a question that came in from one of our viewers for all three of you. What is expected in the real estate pricing and the real estate market in general after the government supports stop? Lindsay, did you want to try and take an attempt at answering that? Is there something built into your model?
Yeah, so it's interesting. We have a strong belief that Markham specific, that the demand's going to continue to be strong, and that I can't speak to the specific government subsidies because I know there's been a tremendous amount, but from my understanding, some of them have tailored off, and that could affect purchasing power for sure. But I think what affects the purchasing power more is the interest rate, the low interest rates. A lot of the purchasing power depends on that. So what we saw from Jason was that that trend looks like it's going to continue to be low. But yeah, and some of them pared back will definitely affect the rates. But then you also have to remember that a lot of the sales we see are actually people immigrating to the country, and so not necessarily getting the subsidies from Canada, or wouldn't necessarily be affected by the subsidies from Canada.
I see.
Mm-hmm.
Matt, do you have any comments on this?
Yeah, for sure. We've been watching and I've been participating with a bunch of landlord and tenant clients over the past year in the various programs, trying to help people understand them, trying to help, make sure we understand them clearly as well. The first big program that the government put out was a rent subsidy program that was paid directly to the landlord, where the tenant had to apply and the landlord had to apply. And then, at the end of the day, the landlord had to agree to a 25% reduction in overall rent. The government was going to pay 50% of that rent, and then the tenant kicked in 25. So it was a bit of a two-headed animal where you had to get both sides to agree, more or less, and then you got a pretty meaningful subsidy though. That helped a lot of businesses through the first 9 months, like no question about it. It was a lot of paperwork, and apparently there's still some, they're chasing down some issues with that initial program in terms of fraud and overreach and stuff that would have gone on. But it was a pretty valuable program. And I think it did help a lot of people through those initial months while there was a lot of uncertainty. It probably saved a lot of people some jobs too, because it was another major element for companies to be able to reduce costs off their books, and that would have saved some of the jobs, which was ultimately the goal. And it certainly kept a lot of landlords afloat, because it meant that, tenants didn't go bankrupt during those initial months. They chose to stick around and pay the 25% rather than just, walk away and leave a key on the desk kind of thing. And now we're into a different program where the money goes to the tenant, and the tenant's supposed to pay that forward. It's a bit of a different model. It's based more on, what percentage of your revenue is down, and there's a bit more of a modeling system that goes on with it. But, I hear a lot less about it these days than we did in the first 6 months. Like the second 6-month period, everybody kind of has found a bit more, I think, of a solid footing for their business in terms of how that program has played out. But I think it's played a critical role in keeping a lot of businesses kind of afloat through the first 6 to 12 months. And now it'll be interesting to see what happens. I mean, obviously there's big pressure on restaurants and retails and gym, like anybody that's in this sort of definite lockdown group. I mean, who's going to the movies? Who's going, it's like sitting in a restaurant could be, I don't know, maybe it's 3 months, maybe it's 6 months away again. Those are, huge, downtimes for these kinds of business operators. If we don't continue some programs, at least on a more specific industry targeted basis, we may see a lot of losses of those kinds of businesses because they just don't have the kinds of assets and resources to kind of hold on for another 6 months. So there's definitely risk there. I think it's kind of specifically within very narrow sectors. It's not like broadly office, or it's certainly not much in the industrial side. There would be, the second somebody went bankrupt, there'd be somebody there to take your industrial unit. But retail, I think there's still a lot of risk out there for businesses to get through the next 6 months. But hopefully those programs remain intact now that we're in another lockdown, I expect they'll extend it probably into the fall.
It's interesting because I heard this morning on the radio, people were calling in who had various businesses, and we often think about the restaurants and retail and theaters and that sort of thing. Some people were calling and saying they had an indoor skating rink or an indoor soccer facility. And we forget about all these other ancillary types of businesses that kind of fly under the radar and are holding, in many cases, quite a bit of real estate that they're paying either rent for or own. And I guess the concern, and I've heard this from politicians, is how do we wean people off of these programs without walking everybody to a cliff? Mm-hmm. And that certainly is going to be a very tricky maneuver of government, and especially federal governments that are not used to dealing directly with smaller businesses. And this time they're involved in all sectors and all sizes of businesses. One of the questions, again, which I'll put out to all three of you and was asked of us, is the ongoing question about the boomer bust of real estate. We've heard this now for years, that Mark, 10 years ago, I remember people talking about real estate prices can't sustain these increases. They just keep going up and up and up. how will this end, or where will it finally correct, or will it correct? I guess that's a question I'll put to, first of all, to you, Jason. I'm sure you have some statistics that could substantiate this one way or the other.
Sure. I mean, if we think about the Greater Toronto Area, I guess thinking longer term, it's really about demographics and how our population grows. I mean, that's what drives demand for housing, whether we're talking about ownership or rental. And so, if we believe that the cultural diversity that sort of highlights the GTA from a global perspective, and if we believe that the economic diversity, where we're creating jobs across a number of different sectors, if we believe that that's going to continue to attract people from all around the world, and I think it will. And certainly, if you think about the federal government and their recovery plan, they're banking on it as well. That you're going to see people, a resurgence in immigration once we get to the other side of COVID-19. Then there's certainly going to be demand for housing in one form or another. That's representative of what a high quality place the GTA is to live and do business. But the flip side of that coin is how are we going to keep up with that? Because if you want to continue to be economically competitive, then you need to be able to bring online on a fairly sustained basis the types of housing that people are going to need, and really, and Mayor Scarpitti touched upon it. I mean, the lead time to get a substantial number of units online, whether you're talking about low-rise housing or high-rise housing, is a decade or more in a lot of cases. And so that obviously needs to be shortened up. We need to look at sort of streamlining that side of things. I think, the other important issue is looking at how do we bring on a greater diversity of housing, and Lindsay touched upon it in some of her comments as well. And I think you are starting to see more and more of that, where there's a realization there, both in terms of the development community, but also policymakers, that we need to see a greater diversity of home types, bridging that gap between traditional single family homes and the condominium apartments, so we have that continuum of housing that people can kind of grow through over time, and even move back down through as we see more aged households. Because part of the issue on the supply side in the GTA right now, and why we're seeing so much competition between buyers for available listings, is that there's a lot of people that would like to move out of their 4 or 5 bedroom home right now, but they don't really see other options that are going to meet their needs in the areas where they want to live, and so they're kind of stuck in place. And that's been a major issue too. So it's the supply of homes in the aggregate or new homes, but also people not willing to move because they don't feel they have the proper options to meet their needs.
Lindsay, a question for you, because and you touched on it earlier about the fact that we are a very diverse community, and Markham's been very successful at drawing people from a number of countries, both investors and business people, as well as people moving here to be with their families. But Markham, to Matt's point earlier, also has this very successful tech industry, light manufacturing, biopharmaceutical business going. So we have people who are on 2 camps. One, the younger people who work in these companies, who for a long time were living downtown and commuting back and forth up to Markham. And the other group, highly paid, highly trained, skilled workers who are getting paid enough that they could afford the housing that existed in Markham. Now the question is, since all of this is shuffled around a little bit, how do we address that?
No, thanks, Richard. There's a great point. And if I may touch on a few things. So the mayor had mentioned it earlier, that there's this initiative in Markham that he's leading up about affordable homes and affordable housing, and we're part of that effort. So we are looking at options. There's so many things on the table, and it's really interesting and creative the way we're approaching it. So, especially we've got 3 major projects right now, but in all those projects, we'll have a much bigger mix of product. So that should allow for some affordable homes. Now, I did I did want to mention that when we talk about affordable housing, which is what's on the table with the mayor, also just want to comment that the price of these of the things involved in building a house and the labor has been dramatically increasing as the years go on. So it's definitely not lost on us that building a house these days is probably double the price of what it was, you know, a couple of years ago. So, you know, we have to constantly adapt to that. But with people moving, the other thing I want to talk about is the technology. You touched on that. So we are, for our project at York Downs, we've actually got rough-ins for solar and electrical charging stations. So for solar power, all the electrical will be roughed in so that they can adapt and put a solar roof on or whatever they want to do. And the electrical charging stations for cars. And that's not mandated by the province. That's something we're taking the initiative, or by the city, I mean, we're taking the initiative because we think that's where these generational homes are going. That by the time, you know, the children of the people who buy the home are buying cars and stuff, everything will be electrical, if they even have cars, right? Which is the hope that that we won't all have cars. What else can I say about that? So with respect to people moving north, I also think, and I just wanted to touch on, Matt made some really good points about the work from home and how this generation's adapting. And it's funny, Matt, I just wanted to say my experience, and maybe it's because maybe I'm the mom staying at home with, or not staying at home, but working from home with kids. I much prefer working from home. And most of my friends would say the same thing. So I think it's, and all the Kylemore staff would say that, like most of them would say that they're preferring working from home. So I think it's a different, it depends on the person you ask, and I think it depends on the business you're in. But I absolutely think that it's a trend we think is gonna be a hybrid, as you said, that continues. So maybe it's 3 days a week or 4 days a week. And we think that Markham will be a great place for people to flock from the city.
Thank you, Lindsay. I just got an email from someone telling me that the mortgage stress test has been raised to 5.25%. I guess that's one of the government's maneuvers to try and cool the housing market. I'll ask each of you in a 30-second response, and without putting you on the hot seat here, one of the things that's being considered by government is to open up the process when you're buying a resale home of knowing what the other bids are if there happen to be multiple bids on a home. Do you think this is a good thing for the market and will do what they hope it will do, which is stop increases that are unreasonable? Or do you think it's something that is just another government intervention that really won't have much impact? I'll start with you, Matt.
I would say that that is not the market. The market is a willing buyer and a willing seller in a private contract. I would not encourage, you know, government intervention in a private transaction to that degree. So no, you know, I don't agree with that level of intervention.
Lindsay?
I would agree with Matt on that.
Okay. Jason?
I think I'll touch on the stress testing first because it's true. There was a lease came out today, and it's not at 5.25 yet. But I mean, I'll point out, and I think this is important when we think about, you know, if we're worried about defaults and that type of thing down the road. That, you know, the majority of people who are purchasing a home today are being stress tested at 4.79, and so that's certainly well above where most people are at on new mortgage origination. Still, you know, hovering below 2%. Even with a bit of an uptick in bond yields over the last couple of months. I think from the perspective of you know, when you're thinking about, you know, looking at transparency and what have you, I mean, there's a lot of different business models in the marketplace, and certainly with a seller's approval, you know, you can look at, you know, making some of that information available as well. But, you know, I'll just say that there's, you know, multiple different business models in the marketplace today that a buyer and seller may look at taking advantage of.
And in all cases, they should be using a TREB agent who's properly trained and has all the support that you guys provide for them. And on that, true to keeping on our time, I want to thank all of you for providing us with your insight today and taking the time to join us. I really appreciate it, and I'm sure that our listeners do as well. We've recorded this session, so it will be available on our website for people who would like to go back and refer to it. We just a couple of reminders. There is a website called openandmarkham.com, which is actually operated by the Board of Trade. It has just 500 businesses listed in it in the Markham area. And I encourage you to go to it, shop local, support these local merchants and businesses, because they definitely, if there was a time when they ever needed it, it is now. Thank you all so much. Stay healthy, stay well, and thank you for your time.